Let's get more details on those Fed minutes that were just released. Jen Schonberger has a closer look at that for us. Hey, Jen.
Good afternoon, Shauna. No Fed officials thought it would be appropriate to cut rates this year, noting that the unwarranted easing in financial conditions could actually complicate the Fed's efforts to bring down inflation. Several participants underscoring that the Fed's median projection for rates of 5.1%, which is above the market's expectations, underscored the Fed's commitment to bring down inflation. All of this signaling to markets, we are not expecting to cut rates this year, even though you're pricing in some of that, and we are not budging unless inflation comes down. Members thought that price pressures could prove to be more persistent than anticipated, with the job market remaining so strong for longer than expected. While Fed officials saw reductions in inflation data for October and November as welcome signs, they stressed it would take substantially more evidence of progress to be confident that inflation was coming down. They noted that, quote, a restrictive policy stance would need to be maintained for them to be confident that inflation is on a sustained downward trajectory. Now, of course, the question du jour for investors, at what pace will the Fed raise rates at future meetings, having slowed down to 50 basis points from 75 basis points? Well, Fed officials not tipping their hand in those minutes, noting only that they will base decisions on future rate hikes on data and the implications for inflation and the economic outlook on a meeting-by-meeting basis. Dave, back to you.
The markets refuse to believe what Jay Powell tells them over and over repeatedly. Jen Schonberger, excellent work. Thank you.